Hello everyone, welcome back. This is Ben Berlin with Berlin Enterprises, full service real estate investment company. We buy and sell houses, we have rental properties, we do lease options, we rehab houses and resell them. We do commercial land development, building spec houses and subdivision of properties, all things real estate related. We have several other businesses. One involving cryptocurrencies, which are completely disrupting the banking system as we know it. It would very much behoove you to educate yourself somewhat on cryptocurrencies and what's going on with that. Bitcoin and another one in particular that I'd love to talk to you about. Huge opportunity with that. It's exploding right now. Also, if you have good credit, there is another excellent business opportunity that I'd love to talk with you about. So anyhow, we are in a video series that I am sharing a training course that I do one-on-one with students, and I am turning it into a video course right now. We're on video 10. And making the decision to invest in real estate is one of the absolute most incredible things you can do. It will bring you to a level that you never before dreamed possible. And to begin that transition into being a place you never thought you could be, which I am now 8.5 years into it, a place I never ever dreamed I would be. But to begin that process, you have to change your mind. And so that's why the first several videos were about mindset changes and self-development. It's all about self-development. And any good businessman, any good success coach will tell you that it's always about personal development. No matter where you are, always strive to better yourself. If you want to go from making $1,000 or $2,000 a month to $10,000 or $20,000 a month, it's a change in your mindset. If you want to go from $10,000 or $20,000 a month to $100,000 or $200,000 a month, you have to change your mindset. So the mind has to change first, and then the money follows. So one of the things you must do is ensure that you are doing what you love, and the money will follow. Real estate is something that I love. There's many fun things about it. It's very exciting. In fact, just today, I locked up a no money down deal. It's a done deal, a clean deal, no money down, awesome deal that I just did today. I locked up another wholesale deal today. It was a place I had under contract. I got a buyer for that. I'm making the difference on that one. Nice fat bonus check there. And it can be done. People talk about no money down deals. They don't understand it. And we'll get into that. We'll get into all of how all that works. But yeah, what else? I did another wholesale deal today also. And it's just fun. There's so many facets of it that you can do. And I've done just about every possible thing you can do with real estate. There are some that are very fun that I love. Rental properties, we talked about those last time. One of the great things about rental properties is they are the best vehicle for wealth creation, as we've talked about. We talked about your net worth statement. You have rental properties, they bring your asset side up and your liability side down. So I want to expand a little bit on the rental aspect of it that we talked about last time, because I won't spend much time on this. What I want to get into is how to kind of calculate for a rehab. And I'm not going to get too detailed with that this time because we get into a lot of that later. We get into a lot of fun stuff later. We get into negotiations, how to negotiate, the mindset you have to get into when you're negotiating with somebody, the mannerisms, the body posture. There's all sorts of things that we get into. It's very, very fun. And there's so much self-development, and it's very exciting what we have to do. But as always, it's just as if you and I are talking one-on-one. No editing of this video, no cutting of it. So if I stumble here or there, give me a little slack. I'm just going off my syllabus here. So let's talk about rental registers. We talked about how to calculate, how to analyze a rental property to see what your net income would be at the end of the day. And what I want to go on about this is what you should be doing is having a spreadsheet based upon all of your properties. So in essence, to review quickly, we showed a 4-unit building, how it would perform, and the bottom line was $846 a month on that one. So what we would do is we would set up, you want to keep track of all the buildings you have. So what you would do is you would set up a spreadsheet just like this in one column, and then for every property you have, you would do property number 2, property number 3, property number 4, and then what you would do is you would calculate, you would add up all the rows of your net positive cash flow, so you see what your total positive cash flow is at the end of that, all of those columns. And then you would add all those up, and that would be what you would salary yourself every month. And so that's a smart way to do it, is to salary yourself the bottom line. And I'm not going to repeat all of this stuff that we talked about last time, but we calculate for vacancies and repair and maintenance and all that. So you would be smart to salary yourself. So this would be run through a business account. You'd give yourself $846 a month. If you don't run into vacancies or expenses, this would increase your account every month. You just would salary yourself. So when you do run into a vacancy or an other expense, you would have that buffer zone built right in. So you should run a spreadsheet for that. I showed you how to do a spreadsheet for budget and net worth. Then you should also run a spreadsheet for your rental register, and that's very simple. A rental register can simply be, let's just use the bottom of this one. So a rental register, if you can read that, my writing's a little horrible sometimes. It would simply be, you would run columns across the top: name, address, rent, date paid, that would be rent amount, date paid, payment, type, maybe, you could put a check number, you could put a, direct deposit, various other, however they paid. Was there a late fee? And so on. You can decide what you want to do with this. Now, there's software out there that you can track rents. If you are just starting out and don't have very many buildings, it might just be a smarter move just to do it on a spreadsheet. It's very simple. Just keep a rental register. You just want to track it month by month, just so you have record of what people have paid and what they owe, and when they paid and all of that. So very simple. Just a couple things I wanted to touch base on. If you have any other questions on how to set up a rental register or a property holdings spreadsheet, I'm more than happy to help you. Again, I'm always available at ben@berlinenterprises.net. As I say in every video, I'm always available, and I'm getting quite a bit of feedback. I'm working my hardest to get back to everybody in a timely fashion. Forgive me if I don't get back to you right away. Very busy, as we all are, and of course it's the holidays, which, by the way, Merry Christmas to everybody, and Happy New Year. I hope 2016 is incredible for you. I trust it will be. Just keep listening to what I tell you to do with real estate, and you will. There's no choice but for it to be an awesome year for you. So what I'd like to talk into next, I did want to talk about next. I did want to touch base on those two things. Hopefully I didn't confuse you. It's pretty simple to track that stuff. You'll thank me in the long run tracking this stuff. So let's talk about, trying to think here what would make the smartest sense. Actually, let me talk about one other thing before I get into what I really want to talk about today. Let's talk about credit lines, because when we talked about your budget and net worth and your net worth statement, we saw the liability side, and we talked about some loans, some mortgage payments, maybe some unsecured loans, credit cards, or credit lines. We talked about those. We talked about that also in the budget, your monthly payment, monthly obligation on said lines or cards or loans. So what I'd like to chat about briefly also is I would recommend putting together a spreadsheet on credit lines or credit cards. And again, people say, what? Credit cards, you can't have credit card debt. Well, most people, that's true. The other 95% of the people that aren't doing, watching this and investing in real estate and bettering themselves and building wealth, credit cards can be very useful for funding. In fact, when I started, I had no money. I came from a modest family. I didn't have any money, but I did have good credit. And so I used credit lines and credit cards for funding. Sometimes they were down payment money for a deal. Sometimes I would get a cheap deal and pay cash for it, pull money off of a credit line. And that's how I did it at first. So I tracked that because you really should know where you are at all times again. So you want to track that. And it's very simple. You just have, you say credit line 1. And then you might have the limit. Then you might have the balance. Then you might have the payment amount on it. And you can make it more detailed than this if you like, or you can make it very simple like this. I tend to like to track, when the account was opened, maybe I track the last 4 digits of it, if it's a credit card in that case. But this is just a good thing to know, to track, so you know how much available credit you have, how much you've used, and what your monthly obligations are on this. So your credit line, maybe it's a 20, we'll just call this a credit card. It doesn't matter if it's a line or a card. We'll call it a credit card. Say it's a Chase. Say the limit is a $30,000 limit. Maybe you have a $10,000 balance. So you pulled money off of a credit card to use as a down payment on an owner financing deal. And what did you do? Like we talked about before, you calculated that $10,000 and you called the credit card company beforehand and asked them how they calculated minimum payment. So there's no surprises how they calculate it. You knew exactly what to expect, exactly how much the payment was, right? Of course you did. And what you need to do, by the way, very simple to calculate. You just ask them how they calculate minimum payment. So I'll get into that, how to do that, but it's very simple. And so say your payment on here, maybe they calculated at 1.5% of the balance. So the payment on here would be $150. Oh boy, my writing's getting bad. So then you would just do that for card 2, credit line 1, credit line 2. You track it all. You know exactly what your monthly obligations are. You know exactly how much you have available. So then you might have another column over here that says available, and that available is obviously you would do this minus this. You have 20,000 available on that card, and then you would add up all your totals at the bottom, and it would just show you, what you have available and what the balances are and what your payments are. Very simple, but again, recommended just to track all of this. Because again, why do I say that? Because if you aren't keeping score, how do you know if you're winning or not? If you aren't keeping score, how do you know if you're winning? And you don't. That's the answer. So that's why we keep score with all this stuff. So I'm just giving you some recommendations on what to do, what I have done in the past and what I do now. And it's constantly evolving, but I would recommend getting started at least with this, because this is what will get you on the right track towards accounting for and keeping score. So enough about that. I don't need to run that into the ground. Let me just look on here if there's anything else. We talked about that. Okay, now this is a little bit more of the what I really want to get into in this series. Again, this is part 2, Business Basics, part 1. We're talking about a lot of tracking stuff. And what we're going to talk about right now, we dealt with how to analyze a rental property last time. And I want to take a few minutes and talk about how to analyze a rehab project. Say you want to do a flip. And flips are, I would say they're a little more advanced. They're very fun, very rewarding. I've just had the opportunity to do several very nice properties that came out very well. Excited about them. And hopefully we get a sale quickly and make a nice chunk of money. So what I won't do is I'm not going, at least right now, I will later lessons teach you at least how to get an idea of how to calculate costs. What you want to eventually do is get to the point where you can walk into a place and you can say, after walking through it, you can say, okay, floor coverings are going to cost me $6,000 here. I need new siding on this house. It's going to cost me $10,000. The roof, I need to do a new roof. It's going to be $6,500. It might need sheeted because you see some waves in the roof, so that's going to be an extra $2,000 on the roof. A paint job inside maybe is $3,000. A new kitchen, let's say you want to gut the kitchen, completely redo it, granite, backsplash, the whole 9 yards, maybe that's a $12,000 kitchen, and so on and so forth. And that's what you need to work towards, is being able to walk into a place and just going through that. And I'll actually share with you a sheet that I've put together that I have actually a version that you can put on an iPad and just punch in the numbers as you're walking through a place, and it calculates the totals for you. Or I just have a paper version that you can write on. So either way, whatever you feel like it. I kind of like the pen and paper as I'm walking through a building. For whatever reason, I use technology all the time, but I like the old school way to do that. So that way, then it'll you can total everything. It breaks all the categories down on rehab expenses, and then it totals things for you. So we'll get into that. But right now, all I want to talk about is just a basic way in how to calculate a rehab project, and then how to subsequently. Actually, I'm not even going to talk about how to make an offer based upon what we find here. I'm just going to show you the costs to calculate, because there are some costs that people just don't think about. So say you have a property, maybe the asking price is $50,000. So we'll call this rehab. This is just a basic analysis on how to calculate for this. So say you have purchase price equals $50,000. I just pulled that number out of the air. Then let's say you've calculated the rehab to be $40,000, okay? And again, at this stage, I'm not ready to get into, or maybe you're not ready to get into, either way, how to calculate rehab, but just suffice to say that it's $40,000. Okay, so then let's say we'll put the ARV, after repair value, equals $135,000. So here is the mistake that most people make, is they say, oh, I can, well, first of all, most people underestimate this rehab cost of $40,000. 9 times out of 10, people underestimate that. Literally, I mean, I've gotten to the point, like I said, where I can get in and I'm pretty accurate on it. I still put a little bit of fluff in there just because I know there's always unexpected costs that come up, but many people underestimate that. So that's why a spreadsheet's so nice, when you actually break down the costs one by one and then tally them all up. It's amazing. It's kind of like your budget. When you start actually plugging in the data, you're like, oh my gosh, I can't believe I spend that much on whatever it might be. But it's the same thing with rehab costs. So that's the first mistake people make. The second mistake people make is they see $50,000 plus $40,000. We have 90 into it, and sell it for 135. I'm going to make $45,000. Well, that's not quite the case, and that's why you have to be so careful. And that's why I call a little bit more advanced, because you really can lose your hat on rehabs if you don't know what you're doing. But you're going to know what you're doing because I'm going to teach you. And you're going to do studying on your own, and you're going to practice, and you're not going to lose your hat on it. You're going to make a ton of money on rehab. So what you really need to calculate in addition to this is your buying costs. And so what are your buying costs? Well, your buying costs will be, think about it. You go to your attorney when you buy it. There is a transfer tax on it. Typically, the buyer and seller each pay 1%. There's attorney fees on it. It can be anywhere from a few hundred to $800, $1,000, depends on your attorney in your area, of course. There's the courthouse. The city always wants their fees for the if there's a mortgage on it, the recording of that. There's all sorts of fees that go into it. There's tax prorations. There's water, sewer, garbage prorations that are calculated. For a property of this price, around $50,000, you're going to be around $2,500 in closing costs when you just buying costs when you buy it. So don't forget that. So you have to calculate that. 2,500. And I just know that from experience. You might not know that, but I'm telling you that you're at a price range of about 50 grand. You're about 2,500 bucks in buying costs. And then what else do you have? You're going to have holding costs. What are holding costs? Well, as you buy the property and as you're rehabbing it, you have taxes that you don't necessarily have to pay them every month, but they're going to have to get paid at some point. So you have taxes over the holding period. You have insurance over the holding period. What else do you have? You might have a gas bill. If it's in the middle of the summer, maybe you don't. But if you're in an area over the winter time, you probably have a gas bill. You're going to have an electric bill that the contractors are going to need to, run their equipment. And you're going to you probably have a water bill for, your painters are going to need water. The contractors might need the toilets, whatever. And you're going to have, what other utility expenses might you have? A garbage pickup. You might have, I guess that's it. Most utilities, taxes. Oh, and insurance. I don't think I mentioned insurance. So say taxes are on a property like this, say let's make numbers simple, $2,400 a year. Let's say insurance is, I'll just try to make this even. Well, that's not going to make sense. Let's say taxes are $2 grand. Let's say insurance is $400. That's realistic. So that'd be over a year. So that's $2,400 for a year. That would be $200 a month. Now on a rehab project, I really try to stick with a 6-month time frame from purchase, rehab, and to sell it. So I calculate 8. I try to stick at 6 or below. So let's just say 8 for our purposes. So let's say our carrying costs are that $200 a month that I said times 8. So that's $1,600. So carrying costs. $1,600. What else do we have? Unless you paid cash for it, and any transaction that you buy that doesn't have a first or a mortgage on it would be considered cash. Even if you, say, used a credit line to pay for it, it's still considered a cash transaction. If you used a credit card or credit lines, you would be paying interest on those. So what else do we have? We have interest expense. So whether or not you have a mortgage on it, or whether or not you're using a credit line or funding from credit cards or a private lender, or whatever the case may be, unless it's just cash that you had saved up in your bank account, you're going to have an interest expense on it. So there's interest expense, and that can actually get quite steep. Say you borrowed, the rehab's 40, the purchase price is 50. Say you borrowed $100,000 on it. I can tell you that you're going to be around it depends on what the interest rate is, but let's say it's an $800 payment. Probably $650, $700 of that is going to be, let's just say $700. I think that's safe. Is going to be interest. Oh, excuse me, sorry guys. Let's say $700 of that's going to be interest every month. So times, again, 8 months, what's 700 times 8? That's $5,600. And then, what other expenses are we going to have in this? Well, we're going to have selling expenses, right? Again, you have your attorney fees, you have your transfer tax, you have your engineering fee, you have yada, 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 you have, your prorations with water and sewer. It seems like no matter what, you're into a couple few $1,000 in selling costs. No matter what, especially if you sell it for that 135, you're going to be probably around $3 grand in selling costs there. So right here, your buying costs, your carrying costs, your interest expense, and your selling costs, that is what people sometimes fail to calculate. So what do we have into the, we have the purchase of 50, we have the rehab of 40, so that's 90. Then we have 25, 35, 41, 91, 97, 12.7 in those costs right there. So that's pretty substantial. So we have 90 plus 12.7, so our total expenses are 102,700 in that case. So, you know, we still have a good profit here, 135 minus 102. Oh, wait a minute, I forgot something actually. Selling costs, if we listed it with a realtor, what else is there? 6% sales commission on there. So 6% of 135 is, that's another 5,000, or 10% would be 13. No, that's like 6,500 or 7 grand or something like that. Yeah, so we'd add another 7 to this. So it's actually 109. This would be like 10 in selling costs if you used a realtor. Now maybe you're blessed and you have a realtor partner that, you know, only charges, maybe he or she won't take a commission. I'm actually in that case. I'm not personally a licensed realtor, but one of my good partners and good friends is a licensed realtor, so he doesn't take a commission on the sale, but the other end of it will, so there's still a 3% commission on the other side. So, you know, instead of 10, maybe that's 7 or something, but, you know, if we add, changing that, this would go to 109.7. So to make numbers easy, let's say it's 110 and 135, so now we're down to a 25K profit. So this is where it's very important to understand all these extra costs that come into it. And believe me, rehabbing places is very profitable. It's very rewarding. You can make a ton of money doing it and have a ton of fun along the way. But I just want you to understand that there is, you know, some things you have to be aware of here. People see that, you know, they just think that, oh, you know, you buy it and sell it and you just make a ton of money, and you do, but you have to be very aware, acutely aware of these costs in here. So, so I hope that makes sense, everybody. I think this is very important on the surface. You know, maybe it doesn't seem that important, but it is very important because this is what will help you make money, understanding everything that goes into rehabbing. And we'll talk about the details of rehabbing. We'll talk about it much more in detail as we continue on, how to calculate for the expenses and how to get estimates. And I'll share with you the spreadsheet that I talked about that calculates them. So again, Ben Berlin with Berlin Enterprises, Ben at berlinenterprises.net, always available at that. Feel free to email me about anything. Hopefully you're enjoying this. Again, Happy New Year to everybody. And I wish you all the best in 2016. Keep your chins up, keep moving forward, always strive to better yourself, and never give up, folks. So here's to your success, and have a great day. Thank you.